Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, the 19th of March, 2015. Got a little bit to talk about. The Fed announcement on Wednesday did rock the market to the upside. Didn't look back at all. Usually we get a three-wave phenomenon. We'll talk about that when we look at the intraday action, but we did not get it. So here's the ES front-month futures contract. We had talked about the fact that that sell signal from over a month ago had wound its way down to the 9-bar startup phase. That is the culmination, the required culmination of that signal, and that ends up being the low day. Since then, we have turned back up in the markets and gained 24 points, 25 points on the S&P. Today, we gained 46 points on the NDX. Stocks gained only 5. It was kind of weak. The biotechs gained 21. It's new closing highs on the biotechs. Google up 8, curling back up towards the highs of the year. Apple up $1.43, also curling back up towards the highs of the year. The VIX dropped 1.69. Look at that, right back to that red static trend line after hitting the green static trend line on the way up. Pretty amazing. Crude oil gained after dipping into the 42s today, new lows. Turned around and reversed back to 45.17 for the close. And gold was up 24 points. We have the trend closing at 0.81. That brings the 10-day moving average back down to 1.16. NASDAQ volume closed the session at 1.8 billion shares. That was a uptick from the last 2 days of the week, which were down under that 1.6 range. Started out very weak, though, on the volume, which is common waiting for the Fed. All right, so what do we have? What did we really accomplish in this move here today? Let's look at the ES 5-minute chart. You can see we did gap down this morning. We were very flat, stuck in about a 5-point range for hours, and then drifted lower over lunch. And then you can see when the Fed announcement hits the big spike. Now, usually you get what we call a three-wave phenomenon. So you shoot one direction. In this case, it would be up on the news. Second wave, that takes 5 to 10 minutes. The second wave then reverses for the next 10 to 15 minutes. And then after that, the big players come in for what we call wave 3 after they've digested the news. And it can be either way. It does not have to be a counter move to either of the moves. For that, it's just called the third wave. As you can see here, we didn't get any pullback. We just shot up. Covered average daily range for the ES in 10 minutes, filled the gaps and more, and really just kept going. Made trading a little tricky, but we did have some nice winners in the afternoon, including Baidu and Apple. Gave us real clean triggers. Also DMND, which was our top pick off the report, worked very well. Let me correct that. It worked, at least without putting you in any danger. It didn't work far enough because it triggered in the last 45 minutes of play and didn't have time. All right, so what does that leave us with for the rest of the week? Well, we had this options expiration this week. Friday is triple expiration for options, commodities, and futures, and it's the March expiration. We've already rolled to trading the June contracts. However, the expiration still has to occur, and it's usually a very dead session on Friday for that expiration. However, the options unraveling move is what's the question mark now, because usually you get that on the Wednesday after the first hour's play. We did not get that today. Volume dropped off after the first hour because we were waiting for the Fed. And so the question becomes, was there some of the options unraveling in this move up after the Fed announcement, or do we still have all or most of the options unraveling to do ahead of the triple expiration? That's what Thursday is going to be about. We're going to have an open. We'll have the first hour of play. Should be some activity. There is some data coming out in the before the market and in the first hour of play, including the weekly continuing and initial jobless claims numbers, the Philly Fed, leading indicators. But after the first hour, we will be looking to see if we get a move starting at that point. If volume holds up, that would be your options unraveling. And that would be the best case scenario for a extended trading session, meaning not just trading the first 90 minutes or an hour and a half to 2 hours like we usually see, but maybe getting opportunities throughout the trading day. That would then lead us into Friday, where we have no economic data at all and just expiration. That's probably going to be a bust. We'll be around for the first hour or two on Friday. But it was a good trading session overall for us. It's some nice winners in general and no complaints, although I hate to see a big move like that without that second wave pullback that we could have been a little more involved in it, both the futures and the stocks, but we still pulled out the green session for sure. Everybody have a nice trading session. Charts as usual brought to you by Signal. We'll be in the lab helping you out. If you do like our videos, please like them on YouTube.